Hello, everybody. This is Mark Lynn with Healthcare Business Specialist in Chattanooga, Tennessee. This is the Provider Relief Funds and Cost Reporting Update seminar or webinar by Healthcare Business Specialist. Today's date is January the 21st, 2021. There is my contact information. And obviously, if you need to get a hold of me during COVID, we're not going anywhere. So we're very available. Danny Gilbert is here with us as well. And if you have issues there, you can, as far as technical issues, Danny is behind the scenes and she'll be helping us with that. Also, she'll help us with the questions that you can type into the question box over there. Or if you want us to open up your line at the end of the presentation, we can open up your line and you can ask us those questions. What does Healthcare Business Specialists do? We prepare a ton of Medicare cost reports. We do program evaluations. We help with startups, emergency preparedness. And if you're in Tennessee, Danny does a ton of those TennCare quarterly reports that you have to submit each quarter to get your additional reimbursement. If you're not a member of our RHC or the community's RHC Information Exchange group, it's got about 2,100 members, and it's got a lot of fantastic people on there that are very generous with their time. I know Patty Harper's online with us here, Charles James, Julie Quinn. There's a lot of people that contribute to that will answer your questions, and a lot of the members are very good at answering very specific questions as well. Disclaimer, everything is up to date as far as I know as of today. With as quickly as things have changed, you know, the guidance is subject to change. We've had a change of administration yesterday, so some of the things that happened before January the 20th may not be applicable very soon in the future. But as of this moment, we know what we know, and unfortunately, Mark Lynn's crystal ball in 2020 and so far in 2021 has been very, very inaccurate. It's not 40 years of experience doing this hasn't really helped a whole lot this year. So there is the question box there. If you want to type in your questions, feel free to go ahead and put those in there. And we did put a couple of slides or a couple of handouts as well over on the side if you want to download those. If you do have trouble downloading them, don't worry. They are on our website at ruralhealthclinic.com. They are also in the Facebook group as well. So the slides are in a couple of different places. Sometimes when you have large files, they tend to not work that well when you download them from GoToWebinar. So let's go ahead and get into the meat of the presentation. On the left-hand side over here, I have what was supposed to happen, what we were told was going to happen. And then over here on the right-hand side, I have what actually happened. The portal for reporting of your provider relief funds was supposed to open on January the 15th, 2021. Yes, I'm a geek. I waited till 12:01, and if you know me, I go to bed about like 9 o'clock at night. So staying up till midnight was monumental, and I was clicking that button and refreshing, and nothing happened. Finally, something did happen about 10 a.m. in the morning when HHS released an update to their website. They released a press release indicating that the portal would open, but only for registration. They indicated that due to the COVID relief bill that was signed on December the 28th by then President Trump, that they needed to make those changes. I don't know. That's their story, and they're sticking to it. I mean, I didn't see that many changes that would have affected their reporting, but that's their story, and we'll let them have that. If you've been following this, that comes to no surprise to anybody that happened. So the portal did open. You can register. It's very easy. It's not hard at all. I did it last night for one of our clients, and we'll show you some of the steps that we took to do that through this presentation today. The great news is the ridiculously short reporting deadline of 1 month. If you look over here on the left-hand side, we basically had 1 month to get our reporting into HHS. That reporting deadline is no longer in play. We don't know what the new deadline is. It will be in the future. That's all we know. So that is good news. We know it's not going to be by February the 15th. Now, my recommendation is, don't just forget about it. Do start working on pulling this information together, because HHS apparently thinks that we've hired a bunch of accountants and statisticians with the money that they've given us on these provider relief funds, because they do ask for all these statistics and money sorted down by quarter, and it's ridiculous the amount of information they ask us to pull together. So do start looking at those. We'll show you some of the information that as of right now they're still asking for. Again, this stuff is so subject to change. And then on the left-hand side over here, it says all funds must be expended by this date, June 30, 2021. As of right now, that is still a good date. And then you must file one last report showing your reporting activity by July 31st, 2021. As of now, that is still a good date. Of course, that's subject to change as we go along. Here was the press release that HHS released on about 10 a.m. on January the 15th. And it basically told everybody that you can begin registering for access, but you will not have to, you cannot use the portal to report your expenses or your lost revenue at this time. Where you're going to find your reporting and auditing information, if you first thing you do, if you don't know anything about this, if you just Google provider relief funds, the first thing that comes up is this website right here from HHS, Corona CARES Act Provider Relief Fund Index. And then once you click on this button, you're going to see this picture. And if I could have taken a bigger picture, you'll go down, you'll see something on provider reporting and auditing will be down here a little lower, but you can see here on the side over here on the left-hand side where it says reporting and auditing. If you'll click into that, you will go to the next page, and this is your reporting and auditing landing page. And the key to this page is, the first thing they tell you is what not to report on here. Nursing home infection control, we ain't nursing homes. We're not worried about that. Rural health clinic testing distribution, we are RHCs, and we're definitely worried about that. That's that $49,000 that we got for COVID testing. That is the one that the National Association of Rural Health Clinics is handling through the reporting of that. So that $49,000 that you got is not going to be reported in this particular website that we're talking about today. Go to the Nathan Baugh and Bill Fenifrock and the whole National Association of Rural Health Clinics team has done a great job with that. It's a very, very simple way to report. You report each month the number of tests that you do. So we need to get them in charge of this portal, because they did such a great job on that portal. And then the third item you don't report are your COVID-19 claims for reimbursement for, I think it's for uninsured patients there. So if you use that portal, that type of information will not be reported on this as well. There's more detail on the RHC COVIDreporting.com. That's where you're going to report your uses of that $49,461.42 that every rural health clinic got for that. So and I believe there is, I know some people they turned the money back in and then they regretted that decision. I believe they're talking about distributing some more of that. So if you didn't get that money, or you turned it in and you think you made a mistake in doing that, which you probably did, you can get a hold of Nathan Baugh, and I think Nathan knows a way to where you can at least get your name, you can at least get a lottery ticket. You may not get the money, but you can at least get a lottery ticket from Nathan to see if you can get that money back. What about for provider-based RHCs? You're probably thinking, does this presentation apply to me? And the answer is yes, sorta. Our provider-based RHCs did not get these large distributions directly to their CCN number or directly to their bank account like independent RHCs did. So you basically, the average rural health clinic, the average hospital got about $4 million. So the average rural hospital got about $4 million. And that came in one lump sum amount. So I would talk to your controller, your CFO. They probably are going to give you some assignments on computing lost revenues and how you spent your COVID-19 expenses, but you will not be doing this reporting yourself. It will be at a different level in your organization there. For your independent RHCs, you guys are you're going to be the ones that will be doing this. So currently, in the stuff in red here, this is straight from the website there. The portal is currently only open for registration, not reporting. So it's about a 5 or 10 minute process to actually set up your registration. Then there's no deadline on it at this time. So if you want to wait a little while, you can certainly do that. There's no rush to do that. But once you do get signed up, I do recommend getting signed up as soon as possible, because you can see here, HRSA is going to send a broadcast email and let you know when you can actually start submitting your information. So you want to be on that email listserv as soon as possible, so you know, so you have as much time as possible. Because we don't know if they're going to give us 30 days or 6 months or 3 months, or how long we're going to have to report this to HRSA and HHS. So the sooner you get registered, the safer you're going to be as far as getting notified of when you can do this. Okay. If you don't have all the information that you need, there's no way to save a partially completed registration. So first thing you want to do is make sure that you have all the information that they're going to need. And we'll show you what information you're going to need in order for you to register. Also, if you're using Safari, Apple type of computer, and you don't have Chrome or Edge or Firefox, you're not going to be able to use Safari to do this. So you do want to you need to download a version of Chrome, and you have to get the latest version of this, otherwise it's not going to work. And then also, just like on Christmas morning, you know, whenever you're putting your children's toys together, you definitely want to read these instructions before you get started. It's going to save a lot of aggravation in trying to get you set up at this registration, because it's going to be frustrating when you go in and you put this information in, which is not a lot, but if you put the information in, then you find out that you don't have the check number when you received a distribution for, or you don't know the date of that ACH where they put one of those distributions into your account. So going into the portal, here is what the portal looks like. And you can see here, so if you click this link right here in the corner here in the left-hand corner, that will take you to this picture of something that looks like this. You're going to everybody's going to have to register the first time around. You can't use your old, you've probably registered 2 or 3 times already for portals in phase 2 and phase 3. You're going to have to register again for this portal. So you start here, you click register, and the little thing in red, if you're like me, your eyes cannot read that. So basically what it says in red is that after completing registration, providers will be notified when they should re-enter the portal to report the use of PRF funds. This functionality is currently not available. Okay, we got that. You've told us that 3 times already, Mark. Here is your Christmas instructions here. They're actually pretty easy to read. This is about, I think it's 5 or 6 pages of FAQs. I would start there. That will make your life a whole lot easier. And then this is about 27 pages of a user guide. It has lots of pretty pictures in it showing what will happen as you go through this. Of course, it only relates to registration at this time, but it's a pretty good, it's not a bad little read. Here is the information that you're gonna need before you go in. And most of this information, what I did was I took the phase 2 and phase 3 applications that we did for some of our other clients and just used that as a starting point. So first thing you need, that's very simple, your tax ID number. Number 2 is your business name. I use the definition on an 855A of this is from the 855A, legal business name, not your doing business as reported on your CP 575. So I would get those quarterly 941 reports that you have, whatever your legal name is, that's what you want to put in this portal. So that's your legal name. Here's something new, and I really like this because we don't do a lot of these because we really couldn't. we don't have the time to do a lot of them, but we have a few people that we, you know, that we just need to help them out. Let's just, and those people, we can have I can be the contact person. So I can do for 20 or 30 of these, we can put my name in there and my email address, and they will contact me for that. So you can have a contact person who fills this form out for you, and they will, and this is the first time they've allowed us to do that. So that's really good. So if you want to put Charles James' name in there or Patty Harper's name in there, and they're going to do it for you, then that's perfectly fine. They can do that. Address, again, this is just going to be your physical address as it appears on your W-9. If you're a hospital and you have a lot of different tax ID numbers within that are in control of this one tax ID number that you're reporting, you need to put all of those tax ID numbers in there as well. Most of our independent RHCs that I know of, they typically just have one tax ID number. Number two here, this item here, this is important that you do ahead of time, because this may take you longer than 20 minutes to find. And if you wait, if you don't do anything for, I think it's either 15 or 20 minutes, the system will log you out and will not save anything you've done. So you need this information ahead of time. So first thing is, what tax ID number did the money go to? Second one was, what was the payment amount? And what I've been recommending is go ahead and use your targeted RHC distribution. And that's what I used last night on the one I signed up. It was a pediatric clinic. Pediatric clinics, because they didn't have a cost report in most cases, and they basically, all of them got $103,269.53 or something like that. So they all got the same amount. So I use that one check, and you only need one check. This is important. You don't have to put every single payment that you got. They just want you to verify one of those payments. So that will make your life a whole lot easier, just verifying this one payment. You know you've got a six-figure payment. Those will be very easy to find. They should have come around May the 6th. That's when those distributions were made. So look in your bank statements around May the 6th. Look for the big, huge check bigger than you've ever seen before in your life, if you're like most of us, and use that one as what you're gonna give HHS. So payment amount, 103 grand. Mode of payment, did they send it through ACH or did they send you a check? If it's a check, you have to have the check number on there. If it's ACH, then it has to have the date that it cleared. So those are pretty simple. Thank goodness they just made us do one check versus having to go through and look for 3 or 4 of these different distributions that they have. And then of course you're going to create a username. The good thing about this one is this username is going to be the clinic. I'm going to be able to set up as a contact. I'll be able to set myself up in there. I'll be able to give them my email, but for your username, and I can have the same email as a contact person many times in this system. That doesn't matter. You can only have one email attached to a user name. So for your clinic, if you have an email address, then we're going to have a different email address for each entity that's set up in there, and you need to set up a password in there. It has to be 8 digits long. It has to have either an uppercase or lowercase lettering in there. It has to have a number in there, or you can have a character in there. You have to have at least 3 of those 4, and it has to be at least 8 digits. Write it down as soon as you put it in there. Last night I was writing that thing down so fast. I don't want to be like the Bitcoin guy that's got $240 million of Bitcoin, and he only has, what, 2 more chances in order to enter a password, or it's going to destroy it all. So we don't want to get into that case, although I don't think there's $240 million on the line here. But so those, again, pretty simple, but it's a whole lot simpler if you know the rules ahead of time and don't have to worry about getting logged out of it. This is the 4th incarnation of the reporting requirements. It's gone from 6 pages to 7 pages. Most of it was the same except for lost revenues, and we'll talk about lost revenues here in a second. Here's our there's three ways that you can do lost revenues. The first two we already knew about. Number one was here the difference between 2019 and 2020 net patient care revenue. Basically, you just take your quarters from 2019, 2020, compare your net patient collections for those periods against those two periods of times, and however much lower 2020 was in 2019, that's called lost revenues, and you can claim that as an expense or as a portion of your distribution. So that's the easiest way to do it, because you're just comparing numbers to 2019 to 2020 numbers. This one here, you can't compare it to a budget. Unfortunately, it says the budget that was established and approved prior to March 27, 2020. And most rural health clinics that I deal with, especially the independent RHCs, they didn't have no budget. I've never seen, I've been doing this 40 years now, never seen an RHC with a approved budget before time, except for the provider base. I do remember when I was controller of a hospital, I remember I hated budgeting time, because we'd have to get that budget done and approved. It had to get the board approval on it. And you might have had one approved before March 27, 2020 in that case, and you could use it. So for you provider-based RHCs, this B could be an option for you. These are the two options that have been around. The third one is the new one. So let's talk about the new way to compute lost revenues. It's basically calculated by any reasonable method. Okay, that frees us up to be creative. Okay, any reasonable method. But if we do this, number one, we're going to be subject to more audits. Although, as a rural health clinic, I don't see you guys being subject to big audits. If they send out a $4 million check to every small rural hospital and they send us a $100,000 check, I know as a former auditor, I know which person I'll be auditing, the $4 million one. But you will be subject to more audits if you use this method. What you have to do is describe your methodology, an explanation of why it's reasonable for you to do it that way, how you identified lost revenues, and in fact that the lost revenue was attributable to coronavirus. So it does seem like a pretty high standard here. The reason where this could come in handy is a couple situations. Number one, this could benefit RHCs that added providers or services in 2020, or you could have been a startup in 2019. So if you're in one of those situations where you were brand new in 2019 and your revenues were nowhere near what they should have been in 2019, and you were thinking that by 2020 that your revenues will be going way up, they're being creative there. There is a way to show some lost revenues. Also, if you've added more physicians or you added new services in 2020 and those services helped you out and they actually made you to where you didn't have lost revenue, your net revenues didn't go down, but if you compared apples and apples, then your revenue did go way down. So this gives us a way of being creative with that and realistically showing what happened for you guys. So that's the method C. That is new. That wasn't in there prior to this time. So that's important. Okay. When we go from, let's go back to, once we hit here, we start this button here, we start registering. The next slide we will see will be this here. So make sure you click this little button. I missed the little button and fooled with it for like 3 minutes longer than I should have. So click this little button and then it will take you forward into the system. And then the next thing you'll see in the system is this, your tax ID number. You're going to put right here. You should know that. Your legal business name will be here. Here is my contact information. Y'all know that. So you can have all that information. There's my email address. The username is the clinic's username. So here I use the email address of the doctor that we're working with for this particular clinic. And then we'll just put where their clinic is located, what city, state, and zip code. We put all that information in there. So far, really easy. My phone number is in there. Don't put the little dots in there like I did. I put 423 period 243-6185 in there, and it said no, don't do that. So so just put your number in with no number, or put your phone number in with no dots or anything like that in it. So that is really the contact information that you have to set up, and then it asks you, will you be reporting on subsidiaries as from this general distribution for our provider, for our independent RHCs? 99% of the time, that answer is going to be no. For you rural health, for you provider-based RHCs, the hospital that's doing this for you, they're probably going to be saying yes for that. But for 99% of the people that are listening to me, we work mainly with independent RHCs. Your answer is going to be no. There's a little thing that says none, which I tried to click that, it didn't work. So none will not work. Let me tell you, you got to either answer yes or no in this situation. Okay. Here is, once we put the information in, which you can tell didn't take very long, was very easy. In our case, we used the payment amount, that 103,253.23. That's how much, if you're a pediatrician, that's how much you got paid on May the 6th, 2020. Pretty much every pediatrician got that same amount. So and probably got it on that same date. So we received it as a ACH. So we put that date on there, on the settlement date. We put the payment amount. Let me see here. What else is in here? If you did get a check, you want to make sure you put the check number on there. You want to look that up before you go in, because again, if you are looking for it and it takes you longer than 20 minutes to find it, you're going to have to start all over again. And then here's the unique username that you put in here as well. Again, this will be an email address. It has to be an email address. And there's the password instructions there. And there's where we put our password in. And we wrote down the password after we put it in and shared it with the clinic. And we got this beautiful thing that says registration successful, and that we can exit. And if you do have problems, there's some support line that you can call. Usually when I've had to call them, they're actually pretty good and you can get through pretty easily. It's not like some of the other support lines I've ever tried to use. So that, from that standpoint, it's really, really good. And then the username email, and this will not go to the contact person, but it goes to the username. They will get this email saying, dear clinic, here's your username. You successfully completed the registration for your provider relief funds portal. And so one thing to remember is, even though the deadlines are moved out, it's a lot of information they're asking for. So I would go ahead and start trying to accumulate that information. We did put together a tool for you guys. It's an Excel spreadsheet. If you click here, it's going to download a tool. It's not going to take you to a website. Let me tell you, a lot of people, they click on this and say, oh, nothing happened. Yeah, something happened. It downloaded an Excel spreadsheet for you is what it did. So when you click here, you're going to get an Excel spreadsheet, and this is what it's going to look like. And you can start filling in the information there. There's your lost revenues and your expenses attributable to, I'm sorry, this is your expenses attributable to coronavirus. There's your general expenses, and then there's your healthcare related expenses. And you just have to summarize those. That's the great thing. If you had less than 500,000, which most of our independent RHCs, that's going to be the case. You have to give them a summary of those expenses. And then here's reporting your net charges, your actual revenues and net charges received by payer. Again, that's a lot more accounting than most of our people use in the past. And then here's your reporting of your lost revenues as well. And then where did you get assistance from? From the SBA, your PPP loan, your CARES Act, that's your funding there. They want you listing all the types of funding. If you got one of those EIDL loans or grants, I know they pretty much gave everybody $10,000. You want to put that in there as well. And then here's a bunch of information. I'm like, oh my goodness, you gotta be kidding. They want your quarterly full-time employees, quarterly part-time, and do this by quarter, part-time, full-time, contracted, your visits by quarter, by telehealth, and by in-person. These shouldn't affect us. These are for hospital folks down here. But and if your hospital got over $750,000, then you are going to be subject to a single audit. So that should be a lot of fun. Okay, we're almost finished with the provider relief section here. That took about 30 minutes or so. So that was good. Here are some of the outstanding questions that we have. We're getting so many questions about this. So let's go ahead and sort of try to answer some of these questions. These are the very quick answers without a whole lot of context, but I think they'll be helpful to you. Should you have tried to spend all your provider relief funds by 12/31? Absolutely, you should have tried to, but if you didn't get them all spent, you still have till June 30th to spend them. Should you try to use it for hazard pay? Absolutely. We've had a lot of our providers get sick. We've had a few that have passed away from COVID. And so you definitely want to pay yourself hazard pay, pay your employees hazard pay. That is a great use of those funds. How long do you have to spend it? That answer is still good, 6/30/2021. If you don't use those funds and we have to pay them back, the answer is yes. So you want to come up with a way of spending those funds. Are they going to be taxable? The answer is yes. I get people keep emailing me saying these funds aren't taxable now, are they? No, they're taxable. You're going to have to report them as a taxable income. So you want to make sure you spend them and put them in your pocket in some way or fashion to your practice. Are the PPP loan proceeds taxable? The answer is no. That may be where people are confused because they see the PPP loan and they think they're talking about the PRF monies. Those are grants in theory, and those are taxable, but the loan proceeds from the payroll protection program, those are not taxable. And this is a beautiful new answer here. Before, when we did the last webinar on this, the answer was if you use the payroll protection program funds to pay payroll or pay expenses, then you could not include those on your tax return as an allowable expense. The December 28th law that went through changed that answer to now those are deductible. So that's great news from that. So your expenses, you can deduct those on your tax return, and you do not have to report the PPP loan as taxable income. Okay. And this is a great answer to, are expenses reimbursed from the PRF funds allowable expenses on the cost report? The answer is yes. So that is good news. So if you are paying those, why I keep forgetting the hazard pay. Hazard pay has been leaving my brain this morning. If you're paying hazard pay, then that is going to be an allowable expense on the cost report. Are these answers subject to change? Absolutely, they change pretty much every day. So that's a very short and very quick item there. It says everybody had a bunch of questions about whether hazard pay was something that you could get reimbursed for. Here is the answer in the FAQs that yes, hazard pay is an increased expense, and you can use that as a part of your provider relief funds. Okay, that is the update on provider relief funds. Let's go into the cost reporting update real quick. We won't talk a lot about it, but we just wanted to give you a few things have changed. Another great thing is you guys that are 12/31 year ends, we have an automatic 60-day extension. So now, instead of our cost reports being due May the 31st, they're going to be due July the 31st. So that gives myself and Danny a lot more time to get those cost reports done. Do get your information into us as quickly as possible. This is an automatic extension. You don't have to apply for it. So I know I've got that question about 100 times in the last, since January the 7th when this came out. We did email one of the, I guess this is Novitas there about this, and they said the extension is automatic. I think we had a 9:30 cost report that got an extension, and we just wanted to, and we actually sent them an email asking for it, and they said yes, They gave us the extension, and then they said, oh, by the way, you don't have to ask for that. We're going to give it to you automatically. So the good news is we have another 60 days to get our cost report done. This is something everybody talks about. It's impossible to herd cats, and I had one doctor at a meeting the other day say, yeah, you can herd cats. I can just move their food. And that's what has happened for Medicare. One of the great things in that December 28th regulation was the caps have been increased for independent RHCs. Not such a great thing for our provider-based RHCs here, but let's go in and let's just show you the impact for our independent RHCs. So let's go ahead and go through that real quick. Medicare RHC cost report upper limits. Right now, when Danny and I fill out your cost report for 12/31/2020, we're going to put an upper limit of $86.31. For 2021, that rate goes up to $87.52. But thanks to this Medicare modernization piece that was put into the latest COVID Relief Act, starting 4/1/2021, that upper limit goes up to $100. That is a huge increase. It is fantastic because independent RHCs, they were really dinosaurs up until this came about, because you were getting paid $87.52 and your average cost per visit is $130 a visit. That's not a long time viable business plan. And so unless you just had a ton of Medicaid that made up for your loss on Medicare patients, really 700 independent RHCs have gone away over the last few years. So this is great news for independent RHCs. And then this will go up by $13 every year for the next few years. To finally, we'll get to be equitable with the FQHC rate. So by 2028, we're running a race to try to get up even with the FQHCs. By 2028, we should be even with them. And then at that point, we'll go to what's called back to the Medicare Economic Index, that lie that the government tells you that healthcare inflation is 1.8% every year. When, let me tell you, my health insurance bill is going up by a lot more than 1.8%. So this is good news. Now, with that, there comes a cost. And what is on provider-based RHCs for new provider-based RHCs, and this was incorrect in the final bill that got passed. It should have read 12/31/2020. It read 12/31/2019. So if you're certified as an RHC in 2020, that's a provider-based RHC, the way the law reads right now, you are subject to these same caps starting April 1st of this year. So I know Charles James and I know the NARHC Bill and Nathan are working very hard to get that get this in the technical correction to where there's something more fair to our provider-based RHCs. We're hoping to get to where if you were started on your provider-based RHC and you were going down that route and you didn't quite get there, that there will be a way to protect you from these new rates. Because if you invested in putting a building up and getting one started thinking that you were going to get an unlimited cap, and then you find out you're going to get $100 a visit, that's going to be an economic catastrophe for you guys. So we're trying to get that protected there. And I know Charles James and Patty Harper are both here, so when we get to the end of this, I'll let Charles give us some comments if you don't mind. Yes, tell us the fix is underway is what he's posted there. So I tell you what, Charles, you're on there. You're typing. Do you want to just tell us where the fix is at this point on the provider base and where we stand?
Sure, Mark. So thank you very much, and thanks for going through that. And so the way this came out, first of all, is when it goes to the Senate Finance Committee, sometimes people are able to affect the final language and sometimes we're not. In this instance, drafts weren't released. Nobody was able to review a draft, and the final legislation came out as such. So indeed, as with everything, you can easily pull that thread. So what Mark just said is, you know, where do we cut that off? So the major number one priority that we were given legislatively and that the Senate Finance Committee and everybody else had was to do no harm. And so the number one priority is that cap cannot be enacted retroactively. That doesn't make any sense at all. So indeed, the Senate Finance Committee is already aware of this. The NRHA has already reached out to them and released a position paper on it. Now, basic schoolhouse rock, civics 101, right? We have to have a legislative vehicle to attach that vehicle to. So it does have to be a legislative change, but the so-called powers that be are aware of it. And the other thing to really keep in mind too is that CMS is going to need to go through a rulemaking process on it. So that has so far been left unsaid. And of course, there's some pretty big priorities out there right now. But these conversations are already underway, NRHA, and we are already talking to our legislative contacts, and CMS has already reached out for some assistance on what this rulemaking process should look like with, of course, I want to reiterate the objective of doing no harm. So, you know,
Perfect.
Thank you, Mark. Thanks for the
Thank you,
opportunity.
Charles. I appreciate you guys legislating that and lobbying to get that done as quickly as possible, because I know we've got some provider-based RHCs that really need some help there. And Bill and Nathan did a great presentation here. If you down here on the bottom here, if you click this link, you'll go, and it's about an hour-and-a-half presentation that they did on these changes. So I would highly recommend going and listening to that. That will be very helpful to you. What I did last night was, okay, I wonder how this is going to affect our clients. And I basically just ran through very quickly and randomly picked 20 cost reports. I didn't mean to pick one from each state, but it sort of worked out that way. And first thing people are going to say, oh, yay, I get $100. My rate's going to be $100 starting April 1st for my independent RHCs. Like, oh, no, maybe that is the upper cap. So what I did is I looked at 20 clinics, excuse me, and what I found was that out of the 20, we had 6 that would not get any increase because of this. So they were actually ended up being below the current cap of the $87.52 or whatever that number is. So they were below that cap. 3 clinics would get an increase, but not all the way up to $100. You can see they're all 3 in the 90s, and then 11 of the clinics would get an increase to the 100. You see their cost per visit range from $100.47, just barely made the threshold, all the way up to $249.97, which that's a pretty high rate for an independent RHC. So don't be thinking that just because we're saying that the upper limit is $100, you're going to automatically get $100. That's not the case. As we can see from this here, 9 out of 20 are not going to get the full $20. So,
hey, Mark, can I say something on that?
Yeah,
real
go
quick
ahead.
on that topic? So that's a great analysis and a great point. So first of all, keep in mind, this is an AIR.
Mm-hmm.
So we still have a cost report to deal with, as opposed to a PPS. It would be kind of a set it and forget it. What we were fearful of was $160 PPS rate had been proposed previously. So with an AIR, you're exactly right. Your costs have to support the rate. And everybody, all of our provider-based brethren and sisters, keep in mind, the first year is that $100 rate. It's going to go to $190. So that the analysis we did on a clinic that at 150 expected at $150 rate expected a $1.5 million pickup. Their pickup went to $500,000 the first year, $900 the third year, and then at 3.8 years they finally got to their originally projected rate. So just keep in mind that 100 is for the first threshold.
Yeah.
Thank you.
Yeah, the rate ramps up pretty quick. I mean, in the general scheme of things, I mean, we go from 100 to 113, 113 to 126. And then by 2024, I mean, if the average cost per visit for an independent RHC, which according to Jeff and Whiffley and the benchmarking reports, which are very good, then, you know, we're gonna at least break even on our Medicare business by 2024 on the average one. So we did have some, I mean, I just randomly picked some pretty low cost per visit clinics there. I was actually surprised how many were that low that we had. So going into the cost report update, the beautiful thing is July 31st, we have the deadline has been extended to then. So we have a little bit longer to do that. Here is all of our RHC cost reporting information on here. I'll be adding this presentation on there as well. In your slide presentation, your attachments there, we do have your the Medicare checklist that we use. We have a 22-page checklist that's in your over there. If you're one of our clients, we have a client portal that's HIPAA compliant and secure. So you can send us bad debt logs and flu shot logs, that sort of things through our HIPAA compliant portal. So just make sure that you send stuff through that. We will send you an invite, and you basically will put in your information, set up a password, and then you can submit your information to us that way. And then what I think Charles made a good point there is if your cost is not up to that level, you know, there is a way to where we can actually accrue some bonuses. So we may want to think about looking at accruing bonuses, especially if you're those people that are in the red section there. Maybe we can accrue some bonuses or look at your expenses to make it to where it was more, where we have more expenses in your cost report. So just keep that in mind. I know if you do decide to pay yourself a bonus for hazard pay and you wanted to apply for the previous year, you have to liquidate that within 75 days of year end. So let's keep that in mind. Also, if you're planning on us doing a cost report for you, or David James or Julie Quinn, and you wanted to do it electronically, there's a new system called MCREF. You'd have to set us up as an authorized cost report preparer. Danny will be the person for us that will be doing those, because I'm old and technology is not my thing. So Danny will be doing those electronically, but set her up as your authorized person. That will be in the EIDM system. And then if you do think that you may have a productivity standard issue, go ahead and get your visit reports to us or your cost report preparer as soon as possible. That way we can request, or they can request a waiver of your productivity standards when we file the cost reports. So here's the comments on that. Due to the impact of COVID-19, we know telehealth visits are not considered a part of your all-inclusive rate. And so we're not counting those visits on the cost report. I know, Charles, you guys have I know the NARHC is working on a fix on that when I was listening to Nathan talk the other day as well. Have we heard any more about that?
No, we haven't. And that's a really good question. What is going to be the future of those telehealth visits at Medicare? So you're exactly right. Right now, those are not encounters and they're not included in the cost report. I will say that our position is at NARHC, and me personally, is that we're hoping to get those defined as encounters so that we just eliminate the distinction. So however anybody feels on that, weigh in, please. Please let us hear from you. But that's the objective, because in our view, in my view, there's not going to be any going back to February of 2020. Right. Absolutely. So right now, there is no legislative fix. CMS has taken the position we need a legislative fix again for that telehealth change for us. And absent that, telehealth will revert to the Q3014 originating site, et cetera, at the Medicare level when the public health emergency ends, which doesn't show any signs of subsiding, check your state agency, because our states, many have already evened that out and defined telehealth visits as encounters. So it's at the Medicare level. We currently don't have a change for that.
And Charles makes a great point there too, is Medicaid is different. And he says, so our cost reports that we file this year, we will probably end up having one cost report that's going to go to Medicare with the telehealth visits carved out of those and expenses carved out. And then we're going to have to go back into that cost report and put back in our expenses for telehealth and our visits for telehealth to Medicaid, because they do pay that at the all-inclusive rate. So that's going to be something we'll have to work through this year and figure out how to do that. We haven't ever crossed that bridge before. So there's the productivity. You go ahead.
That's also also a really strong argument for Medicare changing it, is that the state Medicaid agencies are doing it. Pardon me. Thank you.
Yeah, no problem. Physician, here's your, and these 4,200 and 2,100 for your physician and nurse practitioners, these are for a 2,080 work hour week, so, or work hour year. So remember, this is for 40 hours a week. So if your physician only works half time, then, or he or she, then that's 2,100 visits is the productivity screen. So remember, and don't count your time that when they're doing telehealth visits, because those visits don't count as a part of this all-inclusive rate. So you guys are going to have a lot more accounting to do. I wish I'd have stayed awake in that cost accounting class I had 40 years ago, but I didn't. But they're going to make you pretty much cost accountants here for a little bit. And then here are the applications for productivity standards. I'm not going to go through those. I'm just going to show you what some of them look like. That's the WPS one. This is from Palmetto, what they're going to request from you guys. So just keep that in mind. A time study is going to be very important. If you haven't done one during the year, obviously it's too late to do one during the year, but go ahead and get us one now, and we can at least see what you guys are doing, because we'll need a time study from your providers so we know how much telehealth time they're doing and how much time they're seeing visits that count towards the all-inclusive rate. Here is the EIDM registration. If you have not registered, so you can get your PSNR report and made somebody your authorized cost report preparer like Danny, this is a good time to go ahead and start working on that as well. If you can't get your PSNR and you just can't figure this stuff out, I mean, we have a few minds on the inside that we can get PSNRs for you, but we don't really want to do that. We want you guys to go ahead and pull those for us if you can. We just don't want to use that capital that we have with our folks at Palmetto and CGS and Novitas and all that, but we can pull a few strings and get it if you just can't do it. Here's all of our forms and stuff like that we have. We went through this in the December session, so I won't go through those. Here's the checklist. If you want to click on there, there's the checklist with all the forms in it. There's the 3 pages of the stuff that we need. And when David James and Julie Quinn and Todd Johnson and all of them ask you for it, theirs will be very, very similar to this. These cost reports are they're not that hard. One thing that we will do is a dashboard for you to sort of compare the current year to the previous year and see what sort of issues we have in the cost report. That really helps me in reviewing cost reports to see changes between the years. And so we'll put those together and stick those in your cost report as well. And that will help you see where there's issues that you could actually pick up more reimbursement as well. And then one of the biggest problems we have is paybacks. We've had a lot of paybacks to Medicare recently. And there's a couple, this is me crying, trying to explain to, I think I had one yesterday where she had to pay back Medicare $40. And it's funny how we're upset when we have to pay back Medicare. And that's just the way people are. That's the way I am. If I have to pay back $40, I don't want to pay back $40. So the reason why you could have paybacks to Palmetto or Novitas or whoever is they've started increasing the rates above the cap. And this started about 2 years ago. And so what happens is, even though the cap was $86.31, they were paying you $92 or $93 or $94 to fund your Medicare flu and pneumococcal. They also paid you an interim payment during the year. And what happens is if your Medicare visits either went up dramatically during the year, you tended to get overpaid. If your Medicare bad debts went way down this year, you got overpaid. And so if you got that interim settlement and you didn't tell Mark or Danny or Todd or anybody, your cost report prepared that you got an interim settlement of 30 grand, there's no way for us to know that. And so those created overpayments to you guys. So we put together a form here that says, tell us your interim payments. We really need to know. And so that's important. And here's what your interim payments will look like. If this is one from Palmetto, you can see here they paid them $36,798, and the interim payment was increased to $96.38. If we don't report that on the cost report as a payment, you're gonna end up having to pay back a bunch of money to Medicare if we don't do that. So keep that in mind. So that's all we have. I actually finished within 1 hour, which is a miracle for me. Let me see here. Danny, do you want to, do we have any questions in the question box?
Yes, sir. If you're ready, I'll go ahead and start with there.
I am ready.
On PRF.
What's that?
I said, as of now, they're all on PRF, so that's where we're going to.
Okay. Okay, good.
If you're a hospital and have 2 RHCs, do you have to report on separate registrations?
If you have 2, you wouldn't. The hospital will be taking care of it for you. So I would go to the controller, and they're going to report on the tax ID number of the hospital, and they'll be handling it for you. So it would just be one. It's by a tax ID number. It's not by a CCN number. So go to your controller, your CFO, and talk to them about it. But it will be just one portal entry and one portal username, but you'll be reporting that information.
Okay. The next one, for hospital systems registering to report on a consolidated basis, how do we register as such? Hospitals are not technically subsidiaries of each other, but the system or parent tax ID, which did not receive funds directly because it's just an overhead corporation. Is it okay to use that tax ID for registration and then submit actual hospital tax IDs as subsidiaries?
That is my understanding. With the way that they just described that was my understanding of how they would do it. Because what you do is you put your tax ID number and then you put a comma and you list out all the tax ID numbers that are associated with that. And I believe there's a way in there where it shows where the distributions are segregated between the different entities that you have. But I didn't get into that piece of the portal because I didn't have to. So
okay. The next one is talking about lost revenue. Our clinic started as an RHC in September 2019. How can we compare our budget to 2020? If I need to compare March and April and May revenue 2019 to same months for 2020, because we did not have any RAP payment for those months in 2019. And then it goes on, if I look at those months in 2019 and 2020 as patient number or office visits, it will be 2020 less. Or it'll be less than 2020. Yeah. Would you please let me know how I can do the revenue in this case?
And that's where being creative comes into play, because I know we have some that are like that, where they were September 2019. And when they started as a rural health clinic and started up their practice. And I don't know, we got to think about how something, remember it says you have to justify how you're going to do it. And I haven't got my mind around it yet. I'll probably have to reach out to some smarter people than me and listen to a few more webinars. I haven't heard it. There's a bunch of consultants out there that are dealing with hospitals or different types of entities that are doing webinars, and they're smarter than I am. So we'll work on that one. That is definitely on my to-do list, is trying to figure out how to do that and make a reasonable way to do it.
Okay. Do we add wraparound as income or just the patient collections?
Do we add wraparound? That sounds like a
She's
like a
in
Tuesday
Tennessee, so she's
wraparound
asking,
payment. Then that's definitely going to be taxable income. Is that what they're talking about, Danny?
that's what it sounds like. I think she's trying to look at the lost revenue, and she is from Tennessee, so.
Yeah, you add your wraparound as a part of your collection of your net patient collection. So you would definitely add that to that.
Okay, and then also regarding lost revenue, are the PPP loans and PRF counted as revenue?
Does the PPP, as far as net patient, no, the PPP loans would not be net patient revenue. And then what was the other one?
PRF funding.
No, you would not consider that as a part of your net patient revenues as well. Remember the definition, net patient revenues. So you want to push those things like the SBA money you got, the EIDL loan. You're going to push that off to the side, and you're not going to use that. You're trying to make it an apples to apples comparison between 2019 and 2020.
Clarification needed. Are relief funds required to be incremental just for COVID, or can they include general expenses required to keep the clinic open?
Okay, say that one more time. You lost me on that one.
Are relief funds required to be incremental just for COVID, or can they include general expenses required to keep the clinic open?
I think I see where the question is going, and their definition of incremental expenses has been all over the place. I mean, one of them says if you're paying stuff to keep the business going, then that is an incremental COVID expense, and you could include that. And then the next guidance you get, it says only expenses allowable are directly incremental expenses related to COVID are allowable. And so we don't know what their final definition is going to be. It's gone through at least 4 incarnations that I'm aware of. I think what I would do is try to report as much as you possibly can and get credit for it, and then go from there. We'll probably know more about that as we go along. But right now, like I said, they just keep changing the answer to that question. Okay.
If we hired a new provider, how can we show loss of income as the income is more, but not substantial? How to calculate loss of income with the extra provider? Yeah,
and that's the great thing about the one that they added that C section there is you can basically say, okay, this is the path we were on without this provider, and show, like I said, you sort of converting apples to apples. Say, let's recast our income statement in 2020. If we didn't have this provider adding revenue to it, what would have happened to our revenues without that person? Would it have gone down? And if it would have gone down, then we have a good justification for having lost revenues.
When having to return provider relief payments not expended completely by June, will we still be taxed on the amount that is being returned?
We don't know the answer to that question yet. I would think there'd be a way for that not to be taxed. My understanding, and again, I haven't seen a whole lot on this particular piece of it. I know some people said we're not going to get a 1099 for this money, so we may have a little bit of leeway on how you report it. If you don't get a 1099, if you know that you may have a potential to pay back, you may not recognize that income. I would talk to your tax CPA about that, because if you know me, you know I'm the worst tax person in the world. Don't ever let me get near a tax return. Okay, next question. Danny's laughing because she knows how true that is. Okay.
If we have given our employee bonuses for hazard pay in a lump sum, is this acceptable, or do we need to do it on biweekly paychecks?
Either way would work fine. Either way. They don't have any set way that you have to do it based on bonuses or add $2 an hour or $4 an hour to somebody's pay. That's perfectly fine. How you want to do it is fine.
Okay. Regarding patient care revenue, we received large lump sum bonuses from Medicare Advantage plans. This made us look like we earned more on patient income and did not show the loss we had. Can we carve this bonus out?
I'm thinking you can, because again, we're talking about apples and apples, and that bonus was probably earned in a different period of time. You know, a lot of plans like, oh yeah, you saved us money in 2018, so here's in 2019, here's a big check for you, or 2020. I would probably, I think I could see justifying pulling that out as well.
All
Next
right, if
question.
we have federal tax ID for all clinics, non-RHC and RHC, are we reporting only the rural health clinics?
This is for a provider relief fund, so it's for all. It's not just RHC specific on these provider relief funds. It's for everything.
Do you know if they have extended or will extend the PHE? Last I heard, it was end of January.
It's been extended. It has been extended for another 3 months. I think it's 90 days, and so it's been extended for at least another 90 days.
Okay, got 3 more. The lost revenue section of PRF reporting notes actual revenues / net charges under the sources section. Does this mean we report both gross and net?
What section is he talking? What are they talking about? Let's read it one more time.
It says under the sources section.
Oh, okay. I don't know the answer to that one yet. We'll have to. I don't know. I'll have to look that one up and see. We haven't got to that point yet of having to do that, to fill the actual forms in, because the portal hasn't been opened yet. So we'll find out when we get there.
Okay, and then the last 2 deal with cost reporting. Our deadline for cost report is August 31st because our year end is March 31st. When will our cost report be due?
60 days after that. So what is so it's due, when is it due, Danny? You're better with these numbers than I am.
It's due August 31st.
So just
is what the normal date is.
Okay, the normal date's August 31st, then August, September, October 31st. It will be the new deadline.
Okay, and then how would our practice know if we are one of those 6 that you spoke of that won't be getting any Medicare increase?
I'm not telling. No, we.
This is one of our clients, so we can email them.
Yeah, just email them. It probably is. I know if you're calling, all you have to do is look at your cost report, and on the worksheet C part 2, there's a section on there where it says what your cost per visit is, and look at that number. And if it's over 100, you're in good shape. If it's below 100, then you're not going to get 100 per visit. So okay.
That is all. There is a hand raised though.
Okay, who we got?
Let me see who it is. It's Penny, but it doesn't show that she has a mic. It looks like she's called in, but she doesn't.
Okay, well, we do have Patty Harper online, and Patty's been wonderful to having everybody. Patty, are you still with us?
Yeah. I am, Mark. Thank you for letting me participate.
Okay, and Patty, I know that this morning I talked about E&M coding, and because all the coding has changed this year, and I think you're working on a webinar on that. You want to tell everybody a little bit about that, because I keep getting these questions, and as bad as I am at taxes, I am worse at coding. So
yes, so we do have a 1-hour webinar that's been approved for AAPC credit, and we're trying to figure out the best way and the best time to push that out for everybody. But as of January 1st, our E&M level for office and outpatient services is determined by either the complexity of the medical decision making or the time spent in treatment of that patient on the day of service. So people should be looking for changes to their EHR system on how they document things. If your EHR system has one of those wizard functions, then you're going to want to pay attention to that, because it may not be accurate now, because history and physical do not contribute to assigning the level. So we are going to be pushing that webinar out, and I'll make sure that it gets on the Facebook page when we get that scheduled. So thank you, Mark.
Yeah, and we'll try to get everybody informed about that as well for you guys, because I know we get a lot of questions, and it's something I don't really deal with that much. So okay, Danny, do we have any more before we move along?
No, sir.
Okay. All right. Well, Danny, thank you for your help. Charles James, thank you for what you do with North American and with the National Association of Rural Health Clinics, and Patty Harper, thank you with what you do with InquaSeq and the National Association of Rural Health. Patty's on the board there as well. And we just appreciate you guys very much. Everybody be safe, get your vaccine, and hopefully we can all get together here pretty soon as soon as everybody's vaccinated and COVID is past us. Thank you very much.